Yo, what's good? This is going to be a chill 15-minute YouTube style breakdown of a dope 2022 research paper about whether crypto markets play fair or if there's room to make bank. We're keeping it real with examples like a chaotic road trip or a shady Monopoly game where someone's hiding the good properties. Let's roll. Bitcoin's built on blockchain, a digital vault nobody can hack, like a group text where everyone sees the same T, no fakes. By 2017, crypto went wild. Prices shot up like your fave influencer's follower count. Ethereum came in with smart contracts like apps that handle deals without a middleman. Ripple's like the PayPal of banks, fast and slick. Litecoin's Bitcoin's chill little bro. Dash is sneaky with privacy like a burner phone, and Neem, now called Symbol, was the scrappy one. All about community vibes, but big highs mean big lows, like the 2018 crash that hit like a bad breakup, wiping out billions. Now let's get into this paper. Are the top six cryptocurrencies efficient? Evidence from time varying long memory. It's a mouthful, I know, but stick with me. The researchers, some brainy folks named Sangram Keshari Jaina, Aviral Kumar Tiwari, Bahari Doan, and Shaukat Hamoudeh, looked at six big cryptos: Bitcoin, Dash, Ethereum, Litecoin, NEM, and Ripple. They're asking, are these markets fair? In finance, a fair or efficient market means prices show everything you need to know right now. No sneaky ways to outsmart it. It's called the efficient market hypothesis, or EMH, like the house rules at a poker game. Here's the poker vibe. In a fair game, the cards are random. No way to guess what's next, so you play straight. But if the game's rigged or inefficient, it's like spotting the dealer's bad shuffle. You can predict patterns, bet big, and cash out. The paper uses a thing called the Hurst exponent to check this, like a vibe check for the market. If it's zero point 0.5, the market's random, like flipping a coin. Over zero point 0.5, it's trending like a TikTok sound blowing up. Ride that wave. Under zero point 0.5, it's bouncing back like a rubber band snapping. Buy low, sell high. The twist? These markets aren't stuck in one mode. They switch up like weather in April, sunny one day, storming the next. The researchers used rolling windows of data, like rewatching game clips in slow mo, to track this over time. 260 days for short term, 725 for long term, with jumps of 14, 21, or 28 days to keep it solid. The big reveal: none of these cryptos are consistently fair. They all flip between chill, efficient, trending, persistent, or bouncy, anti persistent. That means there's room to make moves, like finding cheat codes in a game. When markets trend, you follow the crowd, like jumping on a hype train. When they're bouncy, you play contrarian, like betting against the crowd. Why do they act this way? Real world drama. In 2014, markets went nuts. Mt. Gox, a huge exchange, got hacked and crashed like a shady club shutting down. China, Russia, and Japan banned Bitcoin, making it feel like your parents grounding you. By mid 2015, things calmed down with friendlier rules in Europe and Japan, like getting the green light to party. Then 2017 hit, Bitcoin spiked to $20,000, pure chaos, like a Black Friday sale gone wild. The 2018 crash? Total hangover, dragging everyone down. And they rank the cryptos by how unfair they are, using an inefficiency ratio, basically how often the market's got patterns you can exploit, like counting how many times the dealer slips up. Higher ratio, more chances to win. Here's the lineup from wildest to tamest. Dash. Total chaos, like a road trip with no GPS, super inefficient, low liquidity. So it's a gold mine for bold traders, but risky as hell. NEM, another wild card, like a group chat blowing up with random drama. Patterns galore, perfect for quick plays. Bitcoin, the big name, but third most unfair. It's like that popular kid who's messy underneath. Bans in places like China and hype waves make it predictable sometimes. Um, Leetcoin, middle of the pack. Like Bitcoin's chill cousin who follows the same vibe but less intense. Ripple, pretty fair, like a bank transfer that just works. It's tied to real world finance, so it's steady, fewer surprises. Ethereum, the smoothest, most fair. It's decentralized, like an open source project where everyone shares the code. Info flows free, no big edges to exploit. What's this mean for you if you're trading Dash and NEM are like hunting for rare Pokemon? High risk, high reward. You could make bank with smart moves, but don't bet your rent. Ethereum and Ripple? More like a steady job, reliable, but no get rich quick vibes. The paper says this changes over time, driven by stuff like new laws, investor moods, or global chaos, like a market reacting to a new season drop. But yo, that paper's from 2018 data, ancient in crypto time. Let's bring it to 2025, because things have shifted. Bitcoin's still king, with a market cap over $2 trillion, dollars, like the Beyonce of crypto. Ethereum's holding strong, but newer players like Solana are stealing the show with speed. Ripple's been climbing, hitting over $3 after some legal wins, making it even fairer. Litecoin's hanging in, but dipping, still kind of wild. Dash and NEM, they've slid out of the top ranks. Low liquidity keeps them unpredictable. The market's grown up with ETFs and Web3 making it more legit, but it's still got that spicy, adaptive edge. Crises like inflation or bank failures can make things less fair, opening up profit plays, but more players and clearer rules are pushing some toward fairness. Crypto's like the wild west of your old stock market days. Diversify, don't go all in like it's a gold rush. It's your playground, but don't YOLO your whole bag. Use data like on chain signals to time trades smarter. Pros, crypto's freedom, beating inflation sometimes. Cons, it's a roller coaster. Regs, hacks, and crashes keep it spicy. What's next? Markets might get fair as more people jump in, like a game getting balanced patches, but drama keeps it lively. Got questions? Drop them like, is Bitcoin chill now? It's fairer, but still flips. Best for newbies? Ethereum solid for utility. Riskiest? Dash or NEM vibes. That's the wrap. Crypto's a living, breathing beast from 2018 madness to 2025 hustle. This paper nailed how it's not always fair, and that's where the fun's at. Smash that like, share with your squad, and tell me your crypto stories in the comments. Peace.